A few minutes ago, we told you how the new World Trade Center's tenants will be different from those of a decade ago. And that's just one aspect of the changing face of commercial real estate, a sector that's coming back even as residential real estate continues to struggle. Joining us now is Hessam Nadji. He's managing director at Marcus Millichap. That is the nation's largest commercial real estate brokerage and investment services firm. Hessam, good to have you here with Matt and myself.
Good afternoon. It's great to be here.
Hey, you know, whenever we talk real estate, I guess my first question, what I want to know is where are we? How's the market doing?
Well, it's important to differentiate between the for-sale housing market and commercial real estate.
Big difference, isn't there?
Very big difference in that the for-sale market is headed for a double dip. Sales are flat, whereas commercial real estate, because of the economic recovery that we started to see a year ago, is now showing signs of recovery. Every sector, from apartments to retail, office, and industrial, have at least bottomed, and the apartment market is actually in a pretty rapid recovery right now.
So you can differentiate between commercial and residential, but also in residential between apartment and homes. You're saying, though, that corporate America is doing well. So commercial real estate is pretty much fully recovered, whereas we see the dip and maybe double dip in residential real estate.
Well, I wouldn't say we're fully recovered. I would say that we're at the cusp of the beginning of a recovery cycle in the office, industrial, and retail sectors. The apartment sector, you're right, has a very important distinction, is that it's still income property. Investors own it for the income and cash flow that it generates. And it's ahead of every other sector because of the fact that demand is coming back a lot faster than the job growth.
Who's looking for space? Because it was interesting when I was down at the World Trade Center site and talked to the folks in charge of leasing. I mean, Condé Nast is the anchor tenant that they're going after big time. I mean, a media company. It's not a big financial player like we saw with the old World Trade Center site. They've got a Chinese property company there. I mean, they're really going after, I think, law firms and different things. Who's demanding space right now in the commercial real estate market?
Well, it's interesting. If you look at the first the economic driver, which is the first domino that has to fall into place before we see demand for commercial space. In the last 12 months, we've added over 500,000 business and professional service jobs in the U.S. So you would think that demand for office space would be coming back a lot stronger than it is. And the reason it's not is because in the early stages of a recovery, companies use their excess space. So the kinds of tenants that are looking at space right now have already burned through their excess space, or they're looking long term, and that has everything to do with corporate confidence. As corporate confidence recovers this year, we think leasing activity will pick up a lot more than it already has.
It's interesting, though, there's a dichotomy. There seems to be a dichotomy in commercial real estate as well, because office space downtown above the 25th floor, you can't get that. And Midtown, the big towers like 666 Fifth Avenue, those are full as well, right? So the top locations are still gone.
That's absolutely true. In New York in particular, as a major market, is also bifurcated from the rest of the country in many ways. There are a handful of markets like New York, D.C., Boston, San Francisco that are leading the recovery. And within those markets, there are pockets that are far stronger than the others.
Hessam, what do you think about the new World Trade Center site and the buildings down there? Is there going to be strong demand? Do people want to be part of that new community?
I think the timing is excellent, because if you look at what's happened with the New York economy, we lost 105,000 jobs during the downturn. We gained about 50,000 in 2010. This year, we're expecting 85,000 jobs, followed by 90,000 jobs in 2012. And so the timing is very good. Office vacancies went from 6% to 12% in a 2-year period, have already come down to 10.5%. So we're already seeing the trend improving. So by the time these projects are completed, I think we'll be seeing a much stronger marketplace. But I wish the pre-leasing was a little stronger than what we're seeing so far. And that speaks to the corporate caution that I think is still out there. Which
also is evidenced by the fact that there's only one signed deal for the new World Trade Center, right? Because I would think it's full already. Everybody should be excited to move into that. It's going to be hailed as a success, surely.
Right. I think as we go into the rest of 2011, the economy starts, showing hopefully better job growth in the second half of the year. That corporate caution should turn into more optimism.
Hessam Nadji, thank you so much for giving us a breakdown on commercial real estate.
Thanks for having me on.
Thanks for coming.